Insurers have been pushed by startup insurtechs out of Silicon Valley that are trying to disrupt the life insurance process. A life insurance agent in the past may have made 100 calls to get 10 appointments to sell 2 policies. Now he can reach out to 1,000 people, send them a digital link and reach out to them that way. They can complete an application, an accelerated process, and have a policy within minutes.
Unfortunately, the life insurance industry has been wasting their own time and the time of the applicants for years, putting younger, healthier people through the same process they would someone who's not so young and not so healthy. So it doesn't make a lot of sense. Automated underwriting essentially takes data that we have available on people and uses it to make decisions on whether or not they're insurable or not and what level of insurability they are.
There is a $12 trillion gap in life insurance need in the U.S., so I see these processes being able to address that and hopefully close that gap. Life insurance in the U.S. ownership has dropped from, in 1960, according to LIMRA, it was 72%, and in 2016 it was 42%.
So based on the information that we get from different sources, including motor vehicle information, pharmaceutical information, the latest is data from LexisNexis. That's all put together in a score and allows us to make a decision on whether or not the person should be issued a policy right there and then, meaning immediately, or if it might take a little bit more time to make that decision.
So the life insurance companies in the U.S. that are using accelerated underwriting, there's probably about 40 companies today, which is a small percentage by count of the total life market in the U.S.
I think it's been slow for the past 5 or 6 years since it was first introduced, but I think it's gaining momentum. I'd say 5 years from now, more than half of every life insurance company out there will have to have an automated underwriting, or else they're just going to fall behind.
So the cost for accelerated underwriting on each application is about 50% of the cost of a traditional underwriting method. Agents are retiring and not being replaced. Underwriters are retiring and not being replaced. So we need to find new tools to have a more efficient process, and something that today is frankly not very efficient. We are not getting any data on each applicant that they have not specifically authorized the insurer to gather. Future sources of data that may be used in accelerated underwriting, certainly wearables and all of the information that we can get from somebody's Apple Watch or Fitbit or something like that.
With the traditional data that we're collecting now, this is publicly available data. The information from your Fitbit or from your Apple Watch is not publicly available. You would have to make that available to the life insurance company. Really, with the reason for doing that is to try to get a better rate. There's only a relatively small portion of the population that has wearables and who might be willing to share the information from their wearable to get a better rate for life insurance, but it's coming, and it's coming fast, and it can be a benefit to the person who applies for life insurance.